Sole traders and landlords with business or property income over £50,000 must comply with the new tax system called Making Tax Digital for Income Tax Self-Assessment from April 2026. With 780,000 people expecting to join, nearly half of the businesses are not aware of the new tax rules and are not prepared. But if you miss a deadline, you might end up with a penalty. In this video, I will explain what Making Tax Digital for Income Tax Self-Assessment is, who must comply with the new tax system, new increased reporting requirements, deadlines, and penalties that HMRC might issue to you if you miss any of these deadlines. Hi, I'm Sabina. I'm a chartered certified accountant with diverse experience gained at one of the top UK accountancy firms and in the industry. On this channel, I share knowledge and strategies about finance, entrepreneurship, and self-development to help you achieve your financial goals and build a life you truly love. If that's something you are interested in and would like to learn more about, then please subscribe to my channel. What Making Tax Digital for Income Tax Self-Assessment is and who needs to use it. Making Tax Digital for Income Tax Self-Assessment is a new way for sole traders and landlords to report their income and expenses to HMRC. You will need to use Making Tax Digital for Income Tax Self-Assessment. If you are individual already registered for self-assessment, you get income from self-employment or property or both. You have qualifying income of more than £20,000. There are a group of people who don't need to comply with Making Tax Digital for Income Tax Self-Assessment. For example, those without national insurance number. There is a complete list of exemptions on the government website, so have a look at that. I will also leave a link in the description. When you need to use Making Tax Digital for Income Tax Self-Assessment. New tax system will be introduced in 3 waves based on the qualifying income within a tax year, which is total annual income from self-employment and property. If your qualifying income is over £50,000 for the 2024 to 2025 tax year, you will need to use the new tax system from the 6th of April 2026. If your qualifying income is over £30,000 for the 2025-2026 tax year, you will need to use the new tax system from the 6th of April 2027. If your qualifying income is over £20,000 for the 2026-2027 tax year, you will need to use the new tax system from the 6th of April 2028. For example, if your gross income, which is the income before deducting any expenses, is from the self-employment £25,000 and from the property income is £27,000, then your total qualifying income is £52,000, and that would exceed the £50,000, and you would have to start following the new tax rules from April 2026. HMRC will look at the self-assessment tax return that you submitted in a prior year and will write to you to confirm that you are required to start using Making Tax Digital for Income Tax Self-Assessment by the start of the next tax year. If you do not receive a letter, it is still your responsibility to check if and when you need to start using a Making Tax Digital for Income Tax Self-Assessment, and make sure you are signed up and prepared to use it when and if you need to. HMRC says that the aim of this new tax system is for everyone to get their tax right, reduce the errors, improve the records keeping, and improve business productivity. However, the real reason is that HMRC is expecting to generate an additional 780 million of tax revenue from making tax digital for income tax self-assessment. In practice, this will create huge burden for small businesses and landlords. It will result in increased reporting requirements, and it will be transitioned from one annual submission to 4 quarterly updates with final declaration due on the 31st of January. Those 4 quarterly updates that you will need to submit to HMRC are just reporting your income and your expenses, and they are not going to calculate your tax liability. Final declaration at the end of the year is when your tax liability is calculated and your tax payment date doesn't change. You or your accountant will need to keep digital records, send quarterly updates to HMRC, and submit tax return to HMRC using MTD-compatible software. HMRC has a list of compatible software on their website, and you will need to choose one of those providers to be able to comply with these new reporting requirements. This will result in increased accountancy fees and cost of software subscription. My personal favorite accounting software that I recommend is Xero. Xero makes it simple to manage quarterly updates and final declaration, and provides filing solutions and Xero tools to stay compliant for MTD rules. Penalties. When MTD for income tax is mandated from 2026, there will be new penalty regime in place. If you miss a deadline for submitting quarterly updates or tax return, you could receive late submission penalty. Each time you miss a deadline, you will get a penalty point. And when you reach penalty point threshold of 4, you will get £200 penalty. If you miss a deadline for tax payment, you might get late payment penalty and late payment interest on the amount that you owe. New MTD rules with additional reporting requirements mean that a lot of sole traders and landlords are considering incorporating a company to avoid MTD rules, because companies are subject to corporation tax rules, not income tax rules, with one corporation tax return every year. Please speak to your accountant or tax advisor if that's something you are considering. If you found this video helpful, please let me know in the comments below, and I would appreciate if you subscribe to my channel. If you like this video, you might also like this video where I explain what self-assessment tax return is and who must submit one, and what kind of income you must report to HMRC. I will see you there.